wealth managers often say that there's no downside in buying equities, and it never seems to change. What's the primary reason for your saying that today?
Well, we have changed our view a little bit. We've taken off our U.S. dollar high yield position, and we've switched much more to relative trade. So we can talk about that. But you're right that right now the picture looks great. So great that you do have to wonder, can it look even better? And I think the optimism is based on continued central bank stimulus. Central banks globally have added about $1.8 trillion in stimulus in the past 12 months. There's global earnings growth, and the earnings yield for stocks is still beating things like the 10-year Treasury. So those are strong reasons for optimism.
How much does it depend on the likes of U.S. growth and U.S. inflation and growth in other parts of the world as well? We're not seeing healthy enough growth in Europe or even in China, although we did beat.
Well, I think that the continued growth in the United States is an important factor. But if you look back across the period of growth since the financial crisis, this is a pretty strong period because you do have growth in China, you have growth in Europe now, and growth in the United States. So that is a pretty strong global backdrop at a time when there is earnings growth and monetary stimulus.